Hey guys, so Snowflake is a company that recently IPO'd and has had a lot of hype and a lot of people looking to invest in them, including the likes of Warren Buffett. So today I'm going to be taking a look at what the company do, as well as the sort of financials behind Snowflake and whether I believe they are a good stock to invest in right now at the prices that they're currently trading at. So just before we get into the video guys, be sure to leave a like and subscribe if you want to see more videos like this in the future. It really does help me out. Apart from that, let's get right into it. So Snowflake are quite a complex company and one that is not too straightforward to explain how they actually operate, but I'm going to try my best to explain it in a simple way. So Snowflake are a cloud-based data storage and analytics service which allow corporate users to store and analyze their data using cloud-based hardware and software. So Snowflake take all of the data and information that a company is storing in various different places, and they use this to provide useful analytics for the company to allow them to make data-driven decisions to generate more revenue. So it's delivered as a service, and the platform requires close to zero maintenance to keep it going, which enables customers to focus on deriving value from their data rather than managing the infrastructure of it. Additionally, Snowflake claim that their customers can expect a return on investment of 612%, which is pretty massive. But that is if that is true, then that is extremely valuable for a lot of companies to get a large return on their investment into Snowflake services. So more specifically, for those who sort of want to know the more detailed parts of how Snowflake work, Snowflake provide data engineering services, which include data lakes, data warehouses, data science, and data application services, and this all comes from their single platform to benefit the clients that they have. So Berkshire Hathaway are back in Snowflake, and they did buy 6.1 million shares for an estimated IPO price of between $75 and $85 per share. So this was significantly lower than the price offered to the public, and subsequently the price is being traded at right now. So Buffett has historically talked about how buying into IPOs is not particularly favourable for investors most of the time, as the company going public will want to get top dollar for the shares they are offering. And the last time that Buffett actually bought into an IPO was a very long time ago in 1956 with the company Ford. So this does show that Buffett is quite bullish on Snowflake, as he's so bullish on the company that he's decided to buy into his first IPO for over 60 years. So that is quite a positive sign for Snowflake as a company. So the IPO price for Snowflake was originally set at between $75 and $85 per share, which equates to $2.74 billion raised at the top price. But because of Berkshire's interest in the IPO, as well as other investments coming in from the likes of Salesforce, there was a large amount of hype around the Snowflake IPO, with a lot of investors interested in the stock and driving up the interest in the IPO. So because of this, Snowflake increased their IPO price to the range between $100 and $110. So this means that they will have raised approximately $3.4 billion from the IPO, which gives them the cash to continue to grow their business, as well as potentially make acquisitions of other companies too with this cash. So Snowflake then priced its IPO even higher than the already raised range at about $120 per share. So when the market opened, the price instantly shot up to around $250 and continued to gradually grow throughout the day. So this meant that the stock surged by 111% in one day, which is more than doubling the price. So only the ones who got in before the public market opened had access to buy the IPO at the actual IPO price. So this makes it the largest company to ever double in market value on the first day of trading, which is quite incredible really. So the stock has since stabilised between around the mid 200s mark, currently trading at about $230 per share, meaning that the market cap of Snowflake is approximately $63 billion. So people are desperate to get into this company and have been panic buying shares despite the extremely high share price and overly inflated market cap that it's at right now. So this is because the company tick many boxes for a hype stock. So they are a tech stock, they're software as well, and they're also a cloud stock all in one. At the same time, they have super high growth as well, revenue growth and potential profit in the future. So it all kind of plays into one, and it means that this stock is quite overpriced compared to the revenue that they're actually generating right now, as well as the profit they're actually generating right now. And we'll touch on this in the next slide. So Snowflake's financials may not be at the point which justifies their current market price. However, their financials are quite impressive to look at. So they do have 121% Q2 revenue growth year over year. They also have 158% net revenue retention. So this is a really good sign because it shows that each client that they acquire is spending 158% more in the next year with Snowflake, showing that they are happy with the Snowflake product and the service that they're getting, and they're willing to continue to invest in the service. They currently have over 3,100 customers, which does include 146 of the Fortune 500 companies, which is quite a big deal to have that many that they've got in their customer base. They also have 56 customers that are valued at $1 million plus annually, which is also quite impressive to have. However, they did suffer a $178 million loss in the fiscal year of 2019, which then later grew to a $348 million loss for the fiscal year of 2020. So this is quite concerning if you're looking to invest in the company. They've got incredibly high valuations of the company right now, but they're not making a profit at the moment. So this is something that puts some people off buying into the company. So the company should be achieving $1 billion of revenue by 2021, and they should be continuing to grow revenue at a very fast rate for the next 5 years, by which point they should start to be able to make profit over this 5-year period, or by the end of the 5-year period. So one major thing that plays into Snowflake's favour is that a lot of companies are moving their business from on-premises to off-premises, and as this shift continues to take place, especially with the current pandemic that's going on right now, this is only going to benefit companies like Snowflake further down the line. So the way that the market is shifting does definitely benefit Snowflake. So moving on to the risks and concerns with investing in Snowflake. So firstly, they have a price to sales ratio currently of approximately 125, which is insanely high, even for a tech growth stock. So to put that into perspective, here are some price to sales ratios for other tech growth type stocks. So Fastly is at 37, Tesla's at 14, and Zoom, the company that has benefited from the pandemic the most, and is also an extremely hyped up stock, which is thought of to be overvalued by a lot of people, has a price to sales ratio of 109. So as you can see, all of these companies are lower, even Zoom, than what Snowflake's at right now. So this does suggest to a lot of people that the actual price of the share, or the price of the stock right now, is extremely high and or too high compared to what they actually deserve to be at. So another thing is that Snowflake relies on Amazon Web Services to run a large part of its infrastructure and has committed to spending $1.2 billion on technology from Amazon Web Services over the next 5 years. So on the downside to this, Amazon Web Services does have a competing service called Redshift, which it has been investing heavily into for the last few years, placing the relationship between the two companies, Amazon and Snowflake, at a bit of a risk, as there's a bit of a conflict of interest between that in that aspect. So Snowflake could run into some serious issues if Amazon decide they need to cut ties with Snowflake to focus on their own rival service, Redshift, and that could cause some serious disruption in Snowflake further down the line if this was to happen. So finally, hyped up and highly anticipated IPOs of recent time haven't generally performed well since the day of IPO, and Lyft, Uber and Snapchat are a few that spring to mind. So Lyft IPO'd at $72 per share, but is now trading at $27 per share. Uber IPO'd at $45 per share, but is now trading at $34. And then Snapchat IPO'd at $27 and is now trading at $25, which is only a small loss. But it does show that these companies have not made IPO investors profit if they've held from the day of IPO to the current day. So with the financials that Snowflake has right now, along with all of the hype and excitement around them, which has inflated the price. It is reasonable to predict that Snowflake might also fall under this category of underperforming IPOs, and we could see the price start to slowly drop over the next year or so. So what are my final thoughts on Snowflake? So firstly, I just want to say that this video is for purely entertainment purposes only, and you should always do your own research before buying into a company. But my personal opinion on Snowflake is I do definitely like the company. I think their product is definitely pretty good, and I think they've got a lot of long-term potential, especially as a cloud company, because I personally believe that cloud computing and a lot of cloud stocks are going to be a lot bigger in 5 to 10 years' time than they are right now. I also do like the fact that Warren Buffett is a backer and that he's invested in them quite heavily. And that's always promising to know that one of the best investors is backing the company. However, I do think that the price right now is just a little bit too high. I think looking at the financials, they're definitely quite overvalued at the moment. I also do think there's going to be a little bit of a pullback in a few months' time. I can see the price dropping to below $200 per share. And if it does drop below 200, maybe to around the 150 point, I might think about investing. But for now, I'm just going to keep them in my watch list and just keep an eye on what they're up to and keep an eye on the price and maybe look to invest in them when there's a more fairer valuation of the company. So that is all for today's video, guys. Please remember to leave a like if you did enjoy it. It really does help me out. Be sure to comment, let me know what your thoughts are on Snowflake, and let me know if you got in the first week of trading. I'd be really interested to know what your thoughts are on the company. And also be sure to subscribe if you want to see more videos like this in the future. And apart from that, guys, thanks a lot for watching.